Why being poor is more expensive than being rich. Most people think poor people stay poor because they waste money. But what if the opposite is true? What if being poor itself is what keeps draining your money every single day? Kevin buys one good pair of shoes that lasts 5 years. Mark buys cheap shoes 3 times because he can't afford the expensive one up front. In the end, Mark actually spends more. And this doesn't just happen with shoes. It happens with food, transportation, banking, housing, debt, emergencies, and even time itself. Being poor is expensive in ways most people never notice. And once these hidden costs start stacking together, escaping poverty becomes much harder than people think. Today, we're explaining why being poor often costs more than being rich. This interesting. Cheap products that cost more later. Imagine 2 people buying work boots. Kevin has money saved, so he buys a strong $120 pair that lasts for years. Mark doesn't have $120. He only has $25 left after paying rent and food, so he buys the cheapest pair he can find. At first, Mark looks like he spent less money, but 3 months later, the boots start falling apart. The sole breaks. Water gets inside. He buys another cheap pair, then another. After 2 years, Mark has spent over $200 on bad boots, while Kevin is still using the same original pair. Poor people often can't afford quality up front, so they end up replacing things constantly. Cheap phones break faster. Cheap appliances fail earlier. Cheap furniture wears out quickly. The problem isn't that poor people don't understand value. The problem is they usually need the cheapest immediate solution, even if it becomes more expensive long-term. Late fees and penalties. When money is tight, even a small, unexpected expense can create a chain reaction. Imagine Mark already used most of his paycheck on rent, groceries, and transportation. Then, suddenly, his car battery dies. The replacement costs $120. Now he has a problem. If he buys the battery, he might not have enough money for his electricity bill. If he pays the bill first, he can't drive to work. So he delays the bill by 1 week. Then the late fee appears. Now he owes even more money than before. Next month becomes harder because part of his paycheck is already going toward old penalties instead of current bills. For wealthy people, unexpected costs are annoying. For poor people, unexpected costs can create financial domino effects that last for months. One small emergency can slowly turn into debt, penalties, overdraft fees, and missed payments all at once. Payday loans and high-interest debt. Sometimes people don't borrow money because they want luxury. Sometimes they borrow money just to survive until next week. Imagine Mark's paycheck arrives in 5 days, but he suddenly needs medicine today. He doesn't have savings. The bank won't approve him for a normal loan because his credit score is already bad. So he turns to a payday lender. The process looks simple. Borrow $300 now and repay it later. But the interest and fees are extremely high. When payday arrives, Mark repays the loan, but now most of his paycheck disappears immediately. That leaves him short on rent and groceries again, so he borrows again, and again. At this point, the loan is no longer solving the emergency. The loan itself becomes the emergency. Meanwhile, Kevin can usually access cheaper loans, lower interest rates, and better financial options because he already has savings and good credit. Poor people often get the worst borrowing terms precisely when they're the most desperate. Transportation costs. A reliable car can save enormous amounts of time and money, but reliable cars are expensive. Imagine Mark buys an old car because it's the only thing he can afford. At first, it seems like a smart decision. Then, problems start appearing. The engine overheats. The brakes fail. The car breaks down before work. Every repair drains more money. Sometimes Mark misses shifts because transportation becomes unreliable. Sometimes he pays for expensive ride-sharing services at the last minute just to avoid getting fired. Meanwhile, Kevin's reliable car gives him fewer repairs, fewer missed workdays, lower stress, and more flexibility. Poor transportation doesn't only cost money, it also costs opportunities, time, and stability. And public transportation can create similar problems in some areas. Long commute times can reduce time for rest, family, education, or side income. Bad credit costs. Many people think credit scores only matter for borrowing money, but bad credit can quietly make life more expensive almost everywhere. Imagine Mark and Kevin applying for apartments. Kevin has excellent credit and gets approved quickly with a smaller deposit. Mark has bad credit because he previously missed payments during a difficult financial period. Now, landlords see him as risky. He may need to pay larger deposits, higher interest, or accept worse housing options. The same thing can happen with loans, insurance, and even phone plans. Ironically, people with less money are often charged higher costs because companies see them as financially risky. So the people who can least afford extra costs often pay the highest fees. The cost of having no safety net. One of the biggest advantages wealthy people have is not just money, it's recovery time. If Kevin loses his phone, he replaces it. If Mark loses his phone, it can affect transportation, work communication, banking access, job applications, and daily life all at once. Without savings, every mistake becomes more dangerous. A flat tire becomes a crisis. A medical bill becomes debt. A missed paycheck becomes possible eviction. Living without a financial safety net forces people to constantly think short-term because survival comes first. And when your brain is focused on surviving this week, planning for 5 years later becomes much harder. So, being poor is not just about having less money. It's about paying more for weaker solutions, facing harsher penalties, having fewer options, and recovering more slowly from problems. That's why escaping poverty is often much more complicated than simply working harder. Because when every mistake costs more, every emergency hits harder, and every good opportunity requires money up front, the system itself becomes difficult to escape. Understanding these hidden costs helps explain why poverty can trap people for years, even when they're trying their best. And the next time someone says poor people should just save more money, remember this: sometimes the biggest expense of all is being poor.